All right. Well, hello and welcome, folks, to another episode of Thinking Outside the Bank, how to build business credit, how to get access to funds for your company. Now, if you are new to us, thank you for being here. Or if you're finding us on YouTube, hello and welcome. And so today we're going to be talking about something, oops, forgot to silence the phone, but we are going to be talking about something that is actually affecting a lot of people right now, a lot of business owners, a lot of consumers. And that's the big question. Why are credit card companies reducing credit card limits? Why are they hacking the limits right now? My name is Ray Fleming. Picture on the screen, there's also my partner, Joseph Smith. We're the co-founders of Wise Guys and Ties. It's a business credit consulting company. There's our contact information on the screen. So feel free to reach out to us with any questions you have. Also, we're going to cover a lot of information, but if you want some notes to take after the show today, you can get a free business credit guide. All we do in exchange is it's an even trade for your email address. But when you get this guide, basically it's going to be the 4 bulletproof steps to building and maximizing your business credit approvals. All you got to do is text credit to 602-497-2257. All right, so let's talk about this, man. This recession, this pandemic has been literally changing everything. It's disrupted the entire economy, and right now the economy has changed. Let's be honest with that. Lenders are changing how they do things. If we look at and we compare this back to 2006, 7, 8 in the last quote unquote recession. Now, of course, choosing to partake in recession, that's up for debate, but let's just be real with what is taking place. In the last 6 months, we have seen the impact to the economy that took 3 years in the previous housing crash. So some things may change without notice. It seems like every single day something is changing. And so in the lending field, some of these changes are positive towards the borrower, but a lot are not. And we're going to talk about what the differences are right now as far as where lending has actually loosened up a little bit, and then also where it is starting to be restricted. Okay, so positive changes for borrowers. Let's talk about the positive stuff first. Some lenders are offering short-term relief in the form of forbearance, so both personal and business, deferments. They are reducing or deferring interest. That is always positive. So they're trying to allow for some support going through this situation for anybody that's affected by what's taking place with the whole COVID thing. Now, these changes are happening to personal loans such as mortgages, car loans, student loans, or even some business financing. They are only for a limited time. A lot of federally backed mortgages are typically going to be able to get up to 12 months of forbearance. Now, the problem is actually the majority of the mortgages that are in some type of deferment or forbearance are actually conventional, and there's no requirement for banks to work with those lenders. Most of them are on board for about 6 months right now, but we're kind of coming to the end of that. But where does that play into everything? This is important to understand that in the world of lending, everything affects everything. And it all comes down to what the Fed has allowed those lenders or those institutions to have on their balance sheets. And like we said, this is for a limited time only because there's only so long that they can go without getting paid. But this is a positive thing because it's allowing people to get through this difficult time. So here's a couple example of recession responses among banks related to business financing, according to the American Bankers Association. So Fifth Third Bank has payment deferral for small business loans for up to 90 days right now. PNC Bank, which we all love, is waiving late fees on small business lending products. That's really cool because there's a lot of underwriting, document fees, things like that. And so being able to access those lending without having those fees is huge. Valley National Bank is increasing lines of credit for small business owners. Awesome. And these are all related to the economic downturn. They could go away at any time. Like we said, it is all really uncertain right now. But if you go over to the American Banking Association website, which is aba.com, you can learn more about what's taking place. See, they're updating their site with a lot of really good press right now. So I encourage you to go over there if you're interested in more details And also just curious is where we find a lot of our information. We do a lot of the digging, and we'll keep bringing it to you each and every week. Now, so negative changes for business owners. Business borrowers are seeing more negative changes, such as increased credit score requirements. Yes, that's I'm seeing a lot of credit lines right now that are we're approaching 740s, whereas before these accounts could have been achieved or opened with a 680 credit score. I'm seeing some is needing a 740 now. It's jumping. Increased monitoring of credit usage. So, what is the biggest predictor that something is happening? It's their activity. So, some credit cards are even decreasing credit limits. And this is what we're going to be talking today. Why are they actually reducing the credit limits? Well, they do this based on the increased monitoring of your credit usage. They're looking for risky behavior. They may not even notify the borrower. So they do not need to notify you if you are, going to have a credit limit decrease. It comes down to many different things. One, all of a sudden you're racking up a lot more credit than is what your normal activity. That's a red flag. That is a sign that is somebody is in financial struggle or trouble. Also, they if there is a late payment, that is huge. Late payments, as you know this, you probably understand that late payments are the biggest factor in your personal credit and your business credit scores. But one thing you may not understand though is if you have a business credit card, and let's say that it's not reporting on your personal credit, however, you did use your personal guarantee to get that credit card. So you used your social security number, they ran your credit, and it reports to the business credit bureaus. If you are late on that card, then that's when they will report that late on your personal credit side. Or maybe they just report that to the business side. But guess what? It's attached to your social. And anytime there's that report, so let's say that you have a Chase Business Inc. Let's say you got a Chase Inc. business card and you miss a payment, you're late, you're 30 days late. Well, every other credit card, every other lender that you have that is attached to your social security number is going to get notified. They're going to get notified that you were late. And that is one of the biggest triggers that's taking place of how they're going to start dropping limits. So let's say that you have a $10,000 balance on a $20,000 card and you just missed a late payment or you just had a late payment with another credit card. Boom. They're going to I would say that you have a 99% chance right now in this economy that they're going to take you from 20,000 on that other card limit that had you didn't miss those payments. You missed another card that you have. They're going to drop you from all the way down to 10 and they're going to butt up right to your limit. And 30% of your profile is that utilization. So where you were at 50% utilization, now you're going to be at 100% utilization, which of course is going to drop your credit limit because what is happening right now is they're reducing all of the risk. And so if your credit now is at 100% utilization, there's no way that you can get out of it. And this is the trap that's taking place. So some other negative changes for business borrowers. According to Bloomberg, Synchrony Financial noted that they are using their own data as well as data from the credit bureaus to dynamically reevaluate a customer's credit worthiness. In the same Bloomberg report, Discover noted that while they are offering help to existing customers in the form of delaying interest accrual or allowing skipping payments, they're also um, they are also they're also had like a brain freeze. They're also reducing the credit limits for new customers. So what this actually means is if you have credit that you're not being used, they're going to start shrinking those limits first. And then they're going to start issuing that out to new borrowers who will actually be using it. If you have a credit card that you haven't been using, and you need to start using it, or else you are going to be the first to have that account closed or your limit reduced. We're seeing it across the board right now because lenders are wanting to extend the credit to people that are going to be using them, but they're also wanting it not to be overused. So it's this really fine line of, okay, is the credit being used at all? No. Then, Discover and all the other accounts are going to be looking through their wheelhouse, and they're going to say, or all their credit accounts, they're going to say, okay, who is not using it? Let's cut these all first to free up more funds so we can start lending out to other people. And that's what's taking place. So what do lenders consider risky behavior? Like we said, severe increase of credit usage, missing payments, going over your limits. So not just racking up your limits, but actually going over with the interest actually gets starting to be charged on. I got a lot of this information from Experian. So you can go over to Experian blogs and check out the Ask Experian what to do if your credit limit decreases. And we're going to dive a little bit more into that today. So decreased credit limits, just like they can increase limits whenever they want, they run evaluations. And if you've been a really good steward of what you've been given, then they're going to give you a credit limit increase. The same thing for if they see some activity they don't like, they can decrease it without warning, literally overnight. They can do that. And a lot of this is done by the computer systems. These are not actually people that are reviewing these accounts. So because the risk algorithms, and they're the ones that are triggering these decreases, you may not actually be able to overcome that, or even calling. And what we'll talk about in a minute is like, how do you actually handle this? What do you do in this situation? But you got to understand that this is the system that's doing it, the system that's been placed to reduce the risk. Now, they may do so, especially in times of economic uncertainty, like what's taking place right now, and that helps them decrease their exposure and mitigate risk. So federal law offers effectively zero protection to deal with certain aspects. But there are some things that credit card companies are required to do. Banks generally have free rein to increase and decrease as they see fit, as long as it doesn't violate the cardholder's agreement or federal regulations. This happens a lot. This happened literally all across the board in what we call the Great Recession, back in the housing crisis, 2007 to 2009. They were just slashing everything across the board because that's bad paper on their balance sheets. Now, credit card companies sometimes use a tactic called chasing the balance. I mentioned this a little bit earlier, where if you have a $10,000 balance and your limit is $20,000, and then all of a sudden you miss a payment or you're showing some risky activity, then they're going to bring your limit down right to where your balance is. And then as you start to pay that down, your limit will start to decrease as you get it paid down. This is really tough when you're in this situation. This happens when you've missed payments. Right now, if you miss a payment, that is what's going to be happening. They're going to be doing this chasing the balance thing, where they're going to keep reducing it as you start to pay this down. They gradually reduce the limit as much as it's paid down. They do this to prevent from borrowers continuing to increase that debt that they can't afford. This is especially common with personal credit, which makes having separate business credit even more important. Now, there are some separations between business credit and personal credit. We are always talking about, if you're going to use your personal credit, make sure you have a good plan on how you're going to do that with your business. And also build your business credit without intermixing your personal credit. So we'll dive a little bit more into that in a little bit. But the Credit Card Act of 2009 stated that the Credit Card Accountability, Responsibility, and Disclosure Acts of 2009, or for short, the CARD Act. You may think that you are protected from this happening if you're under the Credit Card Act of 2009, but you're not, especially in relation to business credit accounts. This act requires a 45-day notice of implementing changes related to your fee structure, interest rates, or other significant changes. You probably already one time this year have received, if you have a credit card, have received a little, it's like a little, you'll receive in the mail. It's a little folder that just talks about terms and conditions. And, maybe you didn't think much of it, but in there, that's where all the fine the details are in the fine print. And so in there, they could talk about, oh, these are the fee structures that are going to be changing. This could go from a non-annual fee credit card up to, I've seen ones go from, it's a $12 a year fee to $200 a year. It's wild what is happening. So, but they do have to notify you of that. Now, what qualifies as a significant change? The Board of Governors of Federal Reserve defines significant change as an increase in the minimum payment or acquisition of a security interest. So each time you have a credit card, there's an interest rate associated with that. And on other episodes, we talk about, especially on the Tuesday night credit bankings, like for tonight, we go over a lot of how credit cards are actually calculated. If you haven't ever been on that, make sure you tune in 6 p.m. Pacific time for our credit banking mastermind that takes place tonight. But in your payment, there is the amount that goes towards interest, which usually that's a pretty small amount. And then there is the principal pay down that is required. That can fluctuate and that can change. You may have already experienced that. Let's say you have a credit card that was 0% and your payment was only on, let's say you had a $5,000 balance, maybe your payment was only $100. But then after that promotional period ended, all of a sudden your payment jumped to $300 or $400, and you're wondering, how on earth did that happen? Well, this can happen even after that promotional period ended and they change your terms. You could have a $200 payment and nothing on the interest rate or anything changed except for the terms, and that goes from a $200 payment to a $400 payment. And that is what we're talking about. Things like that are starting to take place. So they will notify you if there's change in the annual percentage rate, insurance fees, fixed finance or minimum interest charge, transaction charges, so the cash advances or balance transfers, grace periods, balance computation methods, cash advance fees, or charges on late charges. We're seeing an increase in late charges over the limit fees. That's something that some credit card companies don't have, but now they're implementing. Balance transfer fees, like we said, return payment fees, and a number of other things, but not changes in the credit limit. So you can always check out more information by going over to the Federal Trade Commission website, and we'll put some of these links down in the YouTube video after the recording. All right, so Truth in Lending Act of 1968. That said, the Truth in Lending Act does not make one provision, or let's see, it does make one provision that banks must, so Truth in Lending is banks have to be truthful. Banks must notify a credit line reduction, or notify you if a credit line reduction will trigger an over the limit fee. This would happen if the decrease brought your credit limit under your current balance. Yes, that's kind of like a really messed up thing that I'm seeing right now that people are worried about. I saw a $6,000 credit limit that had a $5,000 balance go down to a $4,500 credit limit, where they actually reduce it below, and it's because they had missed a payment on another account. However, banks usually get around this by waiving any corresponding fees, so they can't charge you those fees when they do it, but only if you bring it to their attention. They'll try to get away with it if the limit does go below the current balance. Now, again, this only applies if you are financing your business with personal credit, as this act does not apply to your businesses. Either way, it isn't much help. Let's see. So what do you do if your credit limit is decreased? Because you may be wondering, what do I do in that situation? Well, first, you have to know that it actually happened. So if you are not actively monitoring your cards, let's say you have some old cards that, for example, let's say you have like a store card. You haven't been using the store card in like a year. It's just out there. You're not really monitoring it. You don't even have paper statements, so they're not sending you every month, and you haven't used it, so you're not even paying attention. They could easily decrease that, and you may not even realize it for a couple of months. So you got to keep a close eye on your statements. You got to watch your credit score. A credit line reduction can decrease your debt to credit ratio, which can affect your score, or actually will affect your score. This will have a negative impact on your credit score. This is where credit monitoring can be extremely helpful. get a free copy of your consumer credit report. If you haven't done it in a year, you can get a free report every year. There's a lot of other services out there that allow you to pull your personal credit report. Join a free personal credit monitoring service. You'll have to pay to monitor your business credit, but it's worth it. So we're kind of intermixing two different things here. We're intermixing business credit, but personal credit. But a lot of the changes and a lot of the effects are affecting credit across the board. So what do you do if your credit limit is decreased? Because like we said, your personal credit is up for grabs right now. They're reducing credit limits even when you're not doing anything wrong, and businesses are seeing decreases if something wrong takes place. So look for surprises on your credit reports. Are there accounts that you don't recognize? Are there accounts reported as late payments that you know you paid? So let's talk about that for a minute. You're like, well, how could I have a late payment that I know I paid? I'll tell you what's happening a lot is deferments. There's forbearance, because just because the bank says that you don't have to make the payment or that they're offering it doesn't mean that they're not going to report you late. The problem is their systems are not set up to do this. So when their payment is not registered, even though you guys may have an agreement, the system is still going to register that as a late payment. So if you have some type of deferment, if you have some type of forbearance set up with the lender, make sure you get in writing. If you're doing it online, take screenshots of the information of where they're saying, okay, this is what we are agreeing to, because then when it's showing up as a negative on your credit report, you can dispute that quickly and effectively by submitting that documentation. Maybe accounts are missing that should be there, and that could be affecting your score. Anything you see that doesn't look right needs to be reported ASAP, because if there's one small error, for example, late payments, we just talked about how the number one killer of those limits is a late payment. So if you're in deferment, if you're in a forbearance and that reports as a late, goodbye credit limits. So this is huge. All right. So what do you do if the credit limit is decreased? Well, first and foremost, call the credit issuers and ask why they decreased the limit. Like we said, a lot of this is systems reducing risk. So there may not be a lot that that person can do, but they could shed some light as to why it happened. They do not have to tell you, but they might. This can help you change any behavior that they perceived as risky, but also give you a chance to explain. And maybe they could have the decision reversed. If a one-time little mess up caused a red flag on your account, you can sit down and explain that to them. So what if your credit card limit is decreased? Do not close that account. Okay. So not when you close the accounts, that starts to affect other aspects of your account. You know, there's age of accounts, and this could be an older account that you've had for a while, and then that could negatively affect your score even more. For personal credit, like we said, the age of accounts affects your credit score. If you close accounts, your average age of account could decrease. For business accounts, you need as many accounts reporting on-time payments as possible to keep your business credit score strong. Keep using business credit cards, even just for small purchases. So personal, business. Now, we don't want to be over mixing. Do not start mixing personal credit with business expenses and vice versa. Still, we want to keep these separate. And also, if you're able to, get business credit without using your personal social security number. You're always going to have to use your social for identity verification, but do it the right way where you're not having yourself personally liable for your business's credit. And continue building business credit scores. This will also show that you're using the cards, as some credit issuers cancel inactive cards. So other things you can do, look for options to bridge the gap. Several small credit lines. These can replace a few larger ones. Also, a business credit line hybrid is a great option for this. So we talk about this a lot. They are reducing lending on the personal side. They're increasing lending on the business side. Unless you start to have some negatives, then you're going to start to lose your business funding as well, if it's intermixed with your personal credit. Now, credit line hybrid, you may not even know what that is. These are business credit lines that work like cash. They have checks associated with them that you can pay things that require checks to pay for out of your business. These are amazing right now. We're still looking at, if you don't have any bankruptcies and you're at least a 680, we want to take a look at that, because there's still a lot of lenders out there that are lending to businesses, and that's primarily who's actually able to get the funding right now. So you need a business expert to really be able to navigate this wire. Having experts can help you navigate this process, and that is essential to your success. An expert can help you apply for a business line hybrid, but they can also help you navigate the entire business funding process and financing process. This is especially important right now when lenders are tightening their belts. So once again, why do you need an expert in this time? Well, a business financing expert can help you find lenders that fit your needs and qualifications. So at the Wise Guys and Ties, what we do is we offer a free financial blueprint. We actually don't ever charge you money for going out and helping you find credit cards, um, or or loans or anything like that. We do charge if we help you build your credit. But if you just want to go see what you could qualify for right now, let's say you have business credit already built, or you have good personal credit and meet some of those qualifications, well, we'll go through that. We'll see if there's something out there that you can qualify for now. There's no charge. That we're basically just connecting you with other professionals. Our team, what we do is we look at not only the big banks like Chase, Wells Fargo, things like that, but we look at the secondary market, or even the third tier right now, who there's a lot of money out there. They're looking to put it into businesses, and they're willing to take those risks. So as a business expert has relationships with many lenders, and they may be able to help you avoid credit line reductions. We can also help you save time by helping you find and apply with lenders whose qualifications you already meet. That way you do not have to be taking all this guesswork. You can take the guesswork out of it, because time is money. So, really, to recap what we talked about today, a reduction in your credit line doesn't have to be the end of everything. There are things you can do. One, keep paying your bills on time. That's huge. And apply for other accounts to help fill that gap. If your personal credit, you run a late payment, that can stay on there for up to 7 years. Business credit, that's going to be on there for up to 2 years. We always talk about business credit. Make sure you're building business credit. We showed in the beginning how you can go over to our Wise Guys and Ties website. You can text credit. You can give us a call. There's a lot of ways to get free guides on how to build business credit. Go over to the Wise Guys and Ties YouTube channel to learn more. If you're watching this on YouTube, make sure you like and subscribe. We're going to keep updating you on everything that's changing, everything from business loans to personal credit. And also, what we talked about today was we talked about the credit line hybrid and how we can help you apply for that, get anywhere from $50,000 to $150,000 in one go for your business. We get expert help to guide you through the process, whether you're using your personal credit or you're not. Let's talk about how you can do it. We still got some time this week to meet with folks. We have specifically blocked off some time for business credit consultation. So we know that this is important. Time is of the essence. So you can give us a call, because if you don't see anything on our scheduler on our website, give us a call and let's see if we can slip you in and find some room for you to get there, because I know that literally time is running out. Also, what we can do is we can help you navigate the red tape, pushback with lenders when it's needed. Lenders may work with professionals more than they might work with you personally. And as experts, we're just one phone call away. Like we said, 888-524-9273. Get access to every legitimate funding program all in one place with the Wise Guys and Ties. You pay us no fees ever. Use our loan volume to get you lower rates and fees. So we actually do the negotiating for you. We have a business blueprint that will graduate you to SBA loans. Never look for funding again. When people start with us, we're committed to working with them for the next 5 years. And so, folks, that really wraps it up for today, as why are credit companies reducing credit card limits. Belts are getting tightened, lending is getting restricted, but there's still money out there if you act now. So give us a call, 888-524-9273. For myself, Ray Fleming, and Joseph Smith of the Wise Guys and Ties, we're here and we're dedicated to helping you and your business succeed. This is a tough time for everybody, but we are dedicated and we will be pushing through each and every day to help you succeed and get through this. I want to say, take care of your loved ones. We'll see you tonight on Credit Banking Mastermind at 6 p.m. Pacific Standard Time. Like I said, good night and God bless.